In 2024, finding high-yield investments is crucial for maximizing returns and growing your portfolio in a low-interest rate environment. As economic conditions evolve, investors are seeking opportunities that offer substantial returns while balancing risk. High-yield investments provide a way to achieve these goals by offering higher income compared to traditional investment options. From dividend-paying stocks and REITs to high-yield savings accounts and cryptocurrency staking, there are diverse strategies to consider. Understanding the potential returns, risks, and market dynamics of each investment type is essential. Explore these top 10 high-yield investments to enhance your financial growth and secure a prosperous year ahead. In this video, we will talk about top 10 high-yield investments for 2024, so make sure to watch the full video. 1. Dividend-paying stocks. Dividend-paying stocks represent shares in companies that distribute a portion of their earnings to shareholders on a regular basis, often quarterly. These stocks are attractive for investors seeking a reliable income stream in addition to potential capital appreciation. High-yield dividend stocks, typically for established companies with a history of consistent payouts, can offer attractive returns, especially when market conditions are uncertain. By investing in sectors like utilities, consumer staples, or energy, which tend to have stable earnings, investors can benefit from regular dividend payments. However, it's crucial to evaluate the company's financial health and dividend sustainability to avoid risks associated with high yields. 2. Real estate investment trusts. Real estate investment trusts are companies that own, operate, or finance income-generating real estate across various sectors such as commercial properties, residential apartments, or healthcare facilities. REITs are known for offering high yields due to their requirement to distribute at least 90% of their taxable income to shareholders as dividends. Investing in provides exposure to the real estate market without the need to directly own property, offering a potential for regular income and diversification. REITs can vary in performance based on the type of real estate they focus on and market conditions, so researching the underlying assets and management team is essential. 3. Corporate bonds with high yields. Corporate bonds with high yields, also known as high yield or jump bonds, are issued by companies with lower credit ratings. These bonds offer higher interest rates compared to investment-grade bonds to compensate for the increased risk of default. Investors seeking higher returns might consider these bonds, but they should be cautious and thoroughly assess the issuing company's financial stability. High-yield corporate bonds can provide significant income, especially in a low-interest rate environment, but they come with greater risk. Diversifying among different sectors and issuers can help manage this risk while aiming for higher returns. 4. Peer-to-peer lending platforms. Peer-to-peer, P2P, lending platforms connect borrowers with individual lenders, bypassing traditional financial institutions. These platforms offer an opportunity to invest in loans made to individuals or small businesses, often providing higher returns than conventional savings accounts or bonds. Investors can earn interest payments on their loans, which can be relatively high depending on the borrower's creditworthiness and loan terms. However, P2P lending involves higher risk, including the potential for borrower defaults. Diversifying across multiple loans and evaluating the platform's risk management practices can help mitigate some of these risks. 5. High-yield savings accounts. High-yield savings accounts offer interest rates significantly higher than traditional savings accounts, providing a secure way to grow your savings. These accounts are typically offered by online banks or credit unions that have lower overhead costs, allowing them to pass on higher returns to their customers. While the returns are not as high as some investment options, high-yield savings accounts offer safety and liquidity, making them an attractive option for conservative investors. They are FDIC insured up to $250,000 per depositor per bank, ensuring your principal is protected while earning higher interest. 6. Municipal bonds. Municipal bonds are issued by state or local governments to fund public projects and can offer attractive yields, especially for investors in higher tax brackets. These bonds are often exempt from federal income taxes and, in some cases, state and local taxes, which can enhance their overall yield for certain investors. Municipal bonds can vary in credit quality and risk, so it's important to assess the issuing municipality's financial health. While they may provide lower yields compared to corporate bonds, the tax advantages and relative safety make them a valuable component of a diversified investment portfolio. 7. Master Limited Partnerships. Master Limited Partnerships are companies that combine the tax benefits of a partnership with the liquidity of publicly traded stocks, typically operate in the energy sector such as oil and gas pipelines, and distribute a substantial portion of their income to investors in the form of high yields. Investing in NLPs can provide steady income, but they come with specific risks, including sector-specific volatility and tax considerations. Understanding the structure of and their underlying assets, as well as staying informed about energy market trends, can help investors manage risk while benefiting from high yields. 8. Emerging Market X. Emerging Market X exchange-traded funds invest in a diversified portfolio of stocks or bonds from developing economies. These markets often offer higher growth potential compared to developed markets, which can translate into higher yields for investors. Emerging Market X provide a way to gain exposure to these high-growth regions while diversifying risk across multiple countries and sectors. However, investing in emerging markets comes with additional risks, such as political instability, currency fluctuations, and economic volatility. Careful selection of ETFs with strong management and diversified holdings can help balance these risks with the potential for high returns. 9. Short-term high-yield bonds. Short-term high-yield bonds offer higher interest rates compared to longer-term bonds, with maturities typically ranging from 1 to 3 years. These bonds, issued by companies with lower credit ratings, provide investors with relatively high returns while reducing interest rate risk associated with longer-term bonds. They can be particularly appealing in a rising interest rate environment, as their shorter duration means less sensitivity to rate changes. Despite their higher yields, short-term high-yield bonds carry credit risk, so diversifying across different issuers and sectors is advisable to manage potential defaults and maximize returns. 10. Cryptocurrency staking and yield farming. Cryptocurrency staking and yield farming are emerging investment strategies in the digital asset space that offer potentially high returns. Staking involves locking up a certain amount of cryptocurrency to support the operations of a blockchain network, earning rewards in the form of additional tokens. Yield farming, on the other hand, involves providing liquidity to decentralized finance (DeFi) platforms in exchange for interest or rewards. Both strategies can offer high yields, but they come with substantial risks, including regulatory uncertainties, platform vulnerabilities, and market volatility. Investors should thoroughly research the platforms and cryptocurrencies involved and consider their risk tolerance before participating. Identifying high-yield investments for 2024 can significantly enhance your financial growth and provide attractive returns in a competitive market. By diversifying across various asset classes such as dividend-paying stocks and high-yield savings accounts, you can balance risk and reward effectively. Each investment type, from corporate bonds to cryptocurrency staking, offers unique opportunities and challenges, making it crucial to understand their specific characteristics. Evaluating potential returns, risks, and market conditions will help you make informed decisions. Implementing these top 10 high-yield investment strategies can position you for a successful year, maximizing your returns while navigating the complexities of today's financial landscape. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.